Hey, everyone. Welcome back to The Passive Pathway, the show where we turn the complex into the possible and the possible into your next passive stream. I'm your host, Nelson, aka Nelly, guiding you as always through the ever-twisting roads of crypto, cash flow, and clever thinking. Now, today we've got someone who's operating at the intersection of old school Wall Street strategy and new school Solana speed, Mr. Joseph Onorati from DFDV. He's part of a movement that's literally building the bridge between traditional finance and decentralized innovation. Now, I don't know about you, but whenever I hear Wall Street meets Solana, I imagine a room full of investment bankers nervously asking, "Wait, what's a validator node?" And Solana devs responding with, "Don't worry, just stake it." What a time to be alive. Now, before we dive into the questions, let me just paint a little picture. We've all heard the buzzwords DeFi, tokenized assets, liquid staking, but Joseph and his team at DFDV are doing something more than just buzzing. They're building a bridge that lets Wall Street actually cross into crypto without getting vertigo. And here's what makes it exciting. We're not talking about theoretical concepts anymore. We're talking about a regulated, tangible way for major financial players to participate in Solana safely, strategically, and smartly. All right, now let's open the gateway to understanding this new frontier. Welcome, Joseph, to the Passive Pathway podcast.
Thanks, Nelly. Thanks for having me. I appreciate it. Nice intro, by the way.
We appreciate you too as well. Okay. Joseph, for our listeners who might not know, can you explain what DFDV does and how it's bringing Solana into the institutional space? Basically, what is DFDV's mission and how does it serve as a bridge between Wall Street and Solana?
Yeah, sure. So DFDV is the ticker for our company or stock, DeFi Development Corp. That's traded on NASDAQ. It's a publicly listed company in the U.S. Mm-hmm. And the purpose of that company is to accumulate and multiply exposure to SOL, the underlying token for the Solana blockchain network. And of course, there are other ways for investors to get exposure to Solana. They can buy it with a Kraken account where I used to work, or they could have a Coinbase account and buy it. Mm-hmm. But there's some friction involved with onboarding with the exchanges, and there's a lot of capital in the traditional financial accounts. Mm-hmm. So we think that DFDV provides the easiest way for investors to get exposure to leveraged Solana. Mm-hmm. And Sweet. That's our purpose or mission. It's about expanding access to crypto in a safe way.
Mm-hmm. Absolutely. And you have built partnerships with some powerhouses. You said Kraken before you worked with Kraken. Orca, Drift, Kamino. How do these collaborations strengthen the Solana ecosystem's connection with traditional finance?
Yeah, I'd say kind of at a high level. To maybe reiterate again how kind of the company works. So basically we raise money in the traditional markets, and then we deploy that capital into SOL. So holding DFDV stock could be thought of as having exposure, price exposure to Solana. And then what we actually do with the assets, we don't just hold them on the balance sheet and They just sit there. We run validators that protect and secure the Solana network and accrue rewards based on the amount of Solana delegated or staked to those validators. So we stake much of our balance sheet assets to our own validators, which basically earn yield denominated in Sol, which accrues value to our shareholders because our kind of key metric internally is Sol per share growth. So our intention is always to be trying to run that number up. And I think we have something like 150% Sol per share growth in the last 6 months. And then to answer your question about how our partnerships or strategic alliances maybe strengthen the Solana network. So across the Solana DeFi ecosystem, there are many projects. The one I think you named was Kamino. It's a lending platform.
Exactly.
On Solana, collateralized lending platform. And with some of our balance sheet assets, we will lend on Kamino. And if you're lending on Kamino, then you can use the assets that you're lending as collateral to borrow as well. So we run, when it's accretive on basically when the interest rate arbitrage is available, we'll run a stake looping strategy, which allows us to lever up Sol on Sol. So we use a liquid stake token, a Solana token, as collateral to borrow more Sol.
Oh, interesting.
Then we stake it to our own validator. And the validator is pretty high performing. And we can often beat the borrow rate on Kamino to earn a net interest margin. So this is just kind of one example of one of the things that we do with our balance sheet assets to grow the Solana ecosystem. So that adds TVL or total value locked to Kamino, which pushes it up in rankings, makes it generate revenue. The Kamino generates revenue off of us, right? And off the counterparties in our loans or our borrows. So that's I guess I think these treasury companies like us, DFDV, have to participate in their blockchain ecosystem and kind of facilitate the creation of their own destiny by growing those ecosystems and driving value to our underlying balance sheet asset, Sol.
Awesome, because I was reading about your major about Sol and what DFDV has been doing, and I think recently your treasury growth went up by, in October 2025 it went up by 86,307 Sols in tokens that you recently acquired, if I'm not mistaken. That was a big one. And not only that, I think the Kamino it's basically the protocol that's actually enhancing the Sol ecosystem on the environment, basically. So that's a major what I would say a major breakthrough there, because not everybody's doing that. It's like it's pretty cool, and that's really giving meaning to the Sol ecosystem. So that's a big leap in that environment, if I were to say. What driving institutional adoption of DeFi solutions, and how is DFDV leading the charge?
So I'm kind of laughing about this because we talked for months, years even, right? We've talked about institutional adoption for crypto. And True. And I guess I have kind of a thesis that retail front-ran institutions into Bitcoin and then into many of the other crypto assets, and I think that continues. And then, I've been saying this for years now, and then I realized that DFDV is an institution. Institutions are here. It's us.
Yeah,
How
it
did
is.
This happen?
I really agree with that.
Yeah, I had a good laugh about that one, but
I'm having one now.
Many of our investors are institutional investors. So
awesome.
We've done 4 kind of distinct fundraisers now, and virtually all of the investors that have come through our fundraisers are institutional investors, but many of them look to work out of their positions in DFDV after those fundraisings, and I think ultimately the long-term buyers of the stock are retail investors. And even if You think about like, maybe this is going too far, but if you think about asset allocators or like a pension fund, right, then end of the day, the buyers or the holders of those assets are retail investors in like a retirement account of some kind.
Why not?
Right?
I think it's a good idea. I mean, it's not going too far. I think it's definitely looks like a savings club.
Anyway, we're the institution and we're here and we're buying Sol. Yeah, the recent price action hasn't been amazing, but if you look at the metrics, like we post on our Twitter all the time with like Sol bull posting essentially. And you just look through the timeline and there's, I don't know, probably dozens now examples of, this is how Solana performed on, the big liquidation day, or this is how Solana fees compare to fees on other blockchains or wallets created or DEX volume, right? And every metric we look at for blockchain adoption. So we're very bullish longer term on Solana, shorter term price action, whatever is crypto.
Why do you believe these are the key bridges between TradFi and DeFi right now? I mean, we were talking about the two hot buzzwords in DeFi, liquid staking tokens, I think, something about that.
Yeah. I don't know if I think LSTs are like the best bridge, but they certainly are playing a role as a bridge. So liquid staking token, I keep hearing this analogy. So you stake an asset, like you stake Sol, then the Sol gets locked up. Then there's a period of time, an epoch, that lasts, I don't know, about 2 days, where that Sol is not available to the Sol holder anymore. You have to unstake it and wait. So it's not liquid. So LSTs solve this problem. This is a bigger problem on other networks with longer like lockup periods. But an LST is you kind of you stake your Sol, you get a receipt token back. People say it's like a receipt and a coat check, and then you can go do something with that receipt token. It becomes a collateral asset. It's liquid. You can trade it and it's redeemable for underlying staked Sol tokens, but there's that duration, the 2-day unlock duration that an investor might have to wait if they were trying to redeem the LST. And what that enables is the LSTs can then be used as collateral assets for systems with real-time liquidation, because you can't use an asset that's locked for, a real-time liquidation system.
Absolutely.
Like collateralized lending platforms in DeFi say. And the LST, the liquid stake token, that receipt token continues to accrue the staking yield. So you don't give up the yield and you maintain the liquidity. That's the idea with these tokens.
Cool.
And there's a company or group on Solana called Sanctum that's created LSTs for a variety of validators, but they've created an LST for DFDV. So DFDV has adopted this LST. It's DFDV Sol. And DFDV Sol is a collateral asset across many Solana DeFi projects now. And like we mentioned, now you can Kamino Drift, trade rates on it, on Radex and Exponent, I think. Anyway, variety of loop scale as well. Variety of Solana DeFi projects. So this kind of enables us to drive additional yield to DFDV stock. It lets us grow our Sol per share at a greater rate. Now we're also seeing LSTs get some adoption in Solana ETFs. And I think this is a pretty good idea, because with the ETFs, they need like a same-day liquidity, like the 2-day like unlock period for staking, the unbonding, is too long for the ETFs. And if you had an LST that was liquid enough, there was a market big enough to trade that LST, then that would make sense to include in an ETF. So
absolutely,
we're seeing some LST adoption kind of, by Wall Street or by institutions, and we're one of the institutions participating.
Awesome. And connected with that is, how do tokenized stocks DFDVX compare to traditional equity models? And I also heard SPS per share. You were talking something about that as well in that. Could you explain that as well?
Yeah. So on the X stocks, so backed.fi, I think it is, and Kraken partnered up, and they've launched X stocks, which are tokenized securities, but the model for how it works is really cool, and it's also live already. So they've got kind of a network of exchanges that are involved. It's not, I mean, I'm sure it's to some degree a walled garden, but they have been very inclusive, and many exchanges can participate. The centralized exchanges have listed the X stocks. Yeah, including many of the Asian ones, which has been really interesting. And it's a Solana token, right? And I think they exist as ERC20s now as well. So there are like Orca pools to trade DFDVX, which is the X stock for DFDV. And essentially the idea is you can buy these on Kraken, and when you buy them, they're minted, and then you can withdraw them on chain and kind of do whatever you want with them. And they kind of follow a stablecoin model where I think the creators of the token can, freeze transactions or whatever if they wanted to, but like you see with stablecoins, but it's also permissionless. In that anyone can transact with them. Like, you don't have to go through a KYC or onboarding process to trade the X stocks on chain, which is really cool in my opinion, and in my view will facilitate rapid adoption of X stocks over alternative tokenized security approaches.
But interesting, you said they're without permission, but they can be frozen.
Yeah, I said that, and I'm like, well, I don't really know what the right words for this are. Like, is USDC permissionless? Like, yeah, in one way it is, right? But if they decide that your wallet ought to be on the bad list, then they can put it on the bad list.
Well, it's basically just like blacklisting someone, just in case if they're doing some hanky-panky with it.
Yeah, I mean, yeah, which has been the case for stablecoins since, basically since they were first issued.
Makes sense. Now, there's always talk about compliance and regulation being the brakes of innovation. How do you balance that fine line between being innovative and staying compliant in DFDV?
Yeah. Well, I think the rules are mostly pretty clear for us, right? So as a public company, we have to be able to pass PCAOB financial audits. So, and then of course, many things that we do, we have to submit a filing with the SEC, which can be subject to comment and review and so on, right? So, but this is just like normal activity for a public company. Just the different or unique thing is we're doing some things that public companies have never done before. Right, like what we've talked about with the LST, there's no public company that's issued an LST.
Yeah.
Well, maybe Coinbase has partnered with an LST provider. I'd say that's probably pretty fair. But certainly running these strategies on chain, I don't know if anybody has done this before. And so we have to make sure that our auditors understand. We have to go through an accounting memo process. And then, of course, we have to put all the proper risk disclosures in the public filings. And those, of course, are subject to SEC, comment and review. And, so far, we've gone through many comment processes and, of course, interact with the auditors on a very frequent basis. But we're lucky, I'd say. Well, yeah, we have I'd say highly competent CFO in John Hand, who I worked at Kraken, and he was at Binance for a while.
Oh, that's
and
good.
The rest of the team that we put together, I think, is very capable on doing this. And then I guess I would anticipate that, maybe we're the first on some of these things, but we're definitely not the last. And I think this is going to become more and more commonplace over time, and maybe we're sort of writing the playbook for some of these other companies.
True. Challenges keep coming anyway. It's the crypto sphere, but it's just how you get through them. And when you've got competing people working for you, it's a piece of cake. It's a walk in the clouds then. Just have to be careful there. Well, here are my bonus questions, Joseph. So what was your personal aha moment that convinced you Solana could play at the institutional level?
Look, I don't really think about this stuff as like, oh, it's institutional or it's not institutional. Like I said, retail's been front running institutions in crypto for many years, and I think that's fine if that continues. That's probably better.
Yeah.
So, aha moment for me was the first time I did a transaction on Solana, and it's like, geez, this is like a Web 2 experience in Web 3, and this is back in, I don't know, mid 21, and I said I got to do something, with this chain, and I participated along the way, but didn't really think I'd be running a Solana related company until January of this year.
Hats off to you. You're doing a great job. And if TradFi and DeFi were two people, what kind of couple would they make? A steady marriage or a fiery love affair?
Oh, interesting. I'd say a steady marriage. My wife and I are fairly different and have been married for a long time.
Lovely. And what misconceptions about crypto regulations make you shake your head the most?
I think it's the money laundering stuff. So this isn't specific to crypto regulation. It's broader. So my understanding of the what's behind the AML effort that we see that drives enormous cost to banks and financial institutions.
True.
And prevents many transactions.
True. I agree with you.
Is the essentially war on drugs. And I think this is like a tough and nuanced topic, but the effort to stop the money as the approach to combating drugs is
true.
I'd say questionable at best.
Mm-hmm.
And this is coming from I've worked in AML compliance before.
Of course.
Seen what we had to go through at a couple of exchanges now in the past, and of course what the banks go through. This whole industry is kind of created by fiat, essentially, by these rules, and we got to question whether that's worth the cost.
How do you see compounding SPS reshaping passive investment strategies over the next few years?
I don't know if I'd say reshaping. I think what we're doing is probably pretty similar to what other companies are doing in one way or another. I think when you're picking a company to invest in, you're that you're going to buy and hold for a stock you're going to hold for a long time, then you probably need to consider the team. It's not just the business strategy, right? But the team, and then you say, okay, can the management team deliver on the growth that they are saying they can deliver on, and for an investor who wants exposure to Solana, I think the treasury companies like DFDV are probably the best way out there to get leveraged long-term exposure, because the treasury companies have specific advantages that the retail investor has a lot of trouble getting. So one is we can buy discounted locked sol. So this requires purchases in large blocks. Essentially, it's not available. We're able to buy this discounted sol from the Alameda bankruptcy, essentially, and investors who purchased it since then. And because we're long-term holders, the duration for the vesting, which expires in January 2028, doesn't matter to us. We're just buy and hold anyway. So we can lever exposure to Solana just through that traditional investor wouldn't be able to get access to. And then we're also able to leverage the size of the balance sheet and the relationships that we have in the ecosystem to, in some cases, get access to investments or yield on Solana that others can't get access to with kind of smaller size. So, for example, we did a partnership with Gauntlet where Gauntlet launched a specific drift vault with the strategy that we wanted for us, and then we can participate in that drift vault that runs like a basis trade using DFDV Sol as a collateral asset. And the intent with that vault is that it will return a higher yield than just holding DFDV Sol would.
Sweet.
And so we can go to a provider like Gauntlet and say, hey, this is a thing that we want to exist and we'll support it. And in fact, we expect a revenue share on any other depositors to that vault. And so anyway, there's a bunch of these kind of opportunities that we can like leverage. And then we're also able to essentially borrow or lever up in a way that is safer and can't or shouldn't result in liquidation risk that other investors might face. So, for example, 2 of our fundraisers are convertible debt financings, and they're very long duration, 5 years or longer. And in some cases, the cost of capital for the convert is relatively very low compared to what one might be able to get, taking a long position on a perpetual swap market or margin trading in crypto. And these loans are unsecured, as in we don't set aside specific collateral to back them that can get liquidated. It's a pool across the whole company. And as long as we're bullish that Solana is going to be at a higher price 5 years from now than it is today, then this debt's very safe.
Joseph, if you could predict one major headline in crypto finance 5 years from now, what would it read?
5 years from now, it would be that nation states adopting crypto. So there'd be another, particular country, X, Y, or Z country, Argentina, Turkey, maybe others say, that we're not launching or adopting a CBDC. We're accepting, for all payments, essentially, tax payments in the country in crypto, and
awesome,
kind of by extension, an adoption of a sound monetary system in that geography.
Wow, that has been absolutely fantastic. That was a lot of pearls of wisdom there, a lot of insight, a lot of information. Thank you so much, Joseph. Joseph, is there anything else you'd like to put in? The listeners must have got a lot of things that they could write down and understand. And if there's any questions or anything that they want to reach out to, of course, in the description, they would be having, as well as in the contributors page where Joseph's bio is there as well, that they could reach out to Joseph and ask him for anything with regards to, of course, the DFDV and or their specific questions with regards to Solana and the crypto itself. So anything from your side, Joseph, that you want to put ahead and say to the audience or the listeners?
Yeah, thank you. I'd say check out the website for DFDV. It's just dfdv.com. And I'm told that we have the best treasury strategy company website out there. So
wow,
I highly recommend checking that out.
Absolutely, guys. Please do that. dfdv.com. Is that correct?
Yeah, thank you.
Awesome. Thank you, Joseph. Thank you so much once again. It's been a privilege. It's been an honor. And thank you so much for coming on the call, on the podcast. And I think the podcast just got brighter and more insightful. And I wish you the best of luck for your company, and keep growing, keep building, and keep making partnerships and keep making everyone happy and rich. Cheers. Joseph, as I listen to all this, I can't help but notice that what you're doing is more than just financial engineering. It's financial evolution. We're watching the old guard of finance finally shake hands with innovation, and that's monumental. It's like watching vinyl records become digital, same music, just smarter tech. And what stands out most is the institutions aren't just dipping their toes anymore, they're diving in, head first with regulation as their life vest. That's the maturity this space needed. For our listeners, if you've ever wondered whether DeFi could truly go mainstream, Joseph's insight just answered that with a confident yes. Joseph, your clarity and vision are refreshing. You've managed to take something that could easily sound like a rocket science equation and make it human, relatable, and dare I say exciting. You've shown us that crypto and capital markets aren't enemies, they're partners learning a new dance. And with leaders like you on the floor, I'd say the rhythm's looking pretty good. To everyone tuning in, remember, the road to financial freedom isn't about chasing every new token that trends. It's about understanding the systems that last, the bridges being built, and the people building them. So whether you're a Wall Street veteran or a DeFi dreamer, keep your eyes on that evolving horizon, because the future isn't waiting, it's already staking. I'm Nelson, aka Nelly. This is the Passive Pathway. And as always, keep learning, keep earning, and keep your pathway profitably passive.
Wake up slow, the coffee hot. Money moves while you are not. No more hustle, no more grind. Earn it smart and save some time. Plug it and tune out the noise. Watch your crypto make some noise. Clicks and streams and big dreams. Living light with passive themes. This the passive pathway. Freedom meets your payday. No boss, no clock, just Wi-Fi latte. We be chillin', we be billin', no limits, just willin'. Earn smart each day. On the passive pathway. Sunrise high, the world below. Cash still flows while you let go. No more stress, no more chase. Money works at its own pace. Set it up, then walk away. Watch the numbers grow each day. Hands are free, but pockets full. Passive life so beautiful. This for passive pathway. Freedom meets your payday. No boss, no clock, just Wi-Fi latte. We be chillin', we be billin', no limits, just willin'. Earn it smart each day. On the passive pathway. This the passive pathway. Freedom meets your payday. No boss, no clock, just Wi-Fi latte. We be chillin', we be billin', no limits, just win. Earn it smart each day.